Good afternoon. My name is Emilie Maehara. I'm the Deputy Executive Director of the Global Fund for Cities Development, FMDV, an international network of local governments dedicated to promoting solutions to finance and invest in cities. I'm very pleased to be a moderator today for this thematic session of the Finance in Common Summit on the theme Unlocking Finance for an Urban and Territorial Just Transition, the role of subnational development banks. This side event is co-organized by Cofides, the African Development Bank, and the Alliance of Subnational Development Bank in Latin America and the Caribbean. I'm pleased to welcome on stage Mr. José Luis Curbelo, who is the CEO of Cofides, and Mr. Sergio Gusmao Suchodolski, who is the CEO of Banco de Desenvolvimento de Minas Gerais. The other speakers will join us online, and we'll have some time for a Q&A session, so please don't hesitate to share your questions on the chat or from the room. So, unlocking finance at the subnational level is a prerequisite to achieve the SDGs. It's acknowledged that 65% of the SDGs may not be fully achieved by 2030 without the involvement of local actors. And of course, it is also critical to achieve the Paris Agreement goals, as cities are game changers in tackling climate change. However, the urban infrastructure gap to achieve the SDGs is estimated to be $5.8 trillion by 2030, and we are faced with a massive systemic market failure of subnational financing, with an insufficient connection between the supply for financing and the demand for financing. Despite a large set of credit lines and instruments set up for urban development, local governments and stakeholders still hardly have access to the required financing, both for project preparation and for the investment itself. This systemic failure is mainly due to inadequate institutional frameworks, a lack of capacities and creditworthiness of local governments, or because projects are being considered either too small or not bankable enough. During our panel, we will exchange on inspiring policies and instruments to address the systemic failure of subnational financing. We will discuss more particularly the role of subnational development banks, we call SDBs, which are public development banks with the specific mandate to provide financing to local governments and local stakeholders. They can either be national development banks or state-owned banks in federal countries. As financial intermediaries, their mandate is to catalyze public and private funding and channel it to local governments and local stakeholders. Thanks to their knowledge of local contexts and ability to lend in local currency, they offer both financial support as well as technical assistance for project preparation to structure pipelines of bankable projects. Due to their strong potential to act as banks of the last miles, SDBs have gained a growing recognition in international agendas to close the subnational financial gap. During the session, we will also exchange on efficient blended finance tools to unlock private investment at the subnational level and the role of PDBs to develop such vehicles. As Mr. Ryu stated this morning, PDBs are the pollinators of the financial system. So, to get started, I'm very pleased to welcome Mrs. Stephany Griffith-Jones, economist, professor at Sussex and Columbia University, who gave us the honor to share a pre-recorded video on the role of SDBs to open our session. Have a good viewing.
Subnational development banks have a crucial role to play because they have the local knowledge, the expertise about the local economies, good projects, the sectors, the financial markets, the financial instruments at a regional level, and they can complement local governments to provide them with additional and complementary finance. And they can aggregate local projects and serve as a bridge with resources that are provided both regionally, but also nationally and internationally. And for example, they've played a very important role in COVID times through a sort of very important counter-cyclical response. In general, all development banks have been very valuable in their response. We can see that in Latin America and the Caribbean, the regional development banks like the Inter-American Development Bank and CAF have had an important response of about $20 billion. And the national development banks have done so at a level much stronger of about 5 times as much, over $90 billion. So very important. And specifically subnational development banks like Findeter in Colombia have played a very valuable counter-cyclical role and supported key sectors. I think there is a very valuable role. On the one hand, international and national development banks can help sub-regional development banks by providing them with additional funding, including funding, helping fund their capital, but also providing loans at often cheaper conditions, which they can pass on to their customers, so that they can broaden the level of activity, which is of course very positive for the subnational development banks and the regions that they benefit. But it's also valuable for the national and international development banks because they know they can channel the resources through an institution which has a lot of local expertise, which overcomes asymmetries of information because they're experts in their own region. And so the money will be better spent. So we have a sort of win-win situation where both actors, both the subnational development banks and the bigger national and regional and multilateral development banks will benefit. I'd like to say that the effort of cooperation between subnational development banks is something really important. And the creation, for example, of this alliance in Latin America and the Caribbean, following on the creation in Africa of these subnational development banks, is very important because they exchange experiences. And I have participated in some of these meetings, and they're really extremely valuable. It's quite a contrast with commercial banks who try and compete with each other and hide what they're doing. Whereas here we have a generous exchange of experiences, which I think is very positive.
Thank you so much, Professor Griffith-Jones, for this great insight and analysis. And now I'm very pleased to welcome Mr. Jorge Arbache, Vice President for Private Sector at CAF, the Development Bank of Latin America. Mr. Arbache, Professor Griffith-Jones highlighted the importance of developing cooperation between SDBs and other levels of public development banks. Can you share your experience as an MDB in cooperating with SDBs? The floor is yours. Thank you.
Thank you. Thank you very much. Good morning and good afternoon to my fellow Alliance colleagues, to my fellow panelists, and to all who participate in the Financing Common. It's a great satisfaction to participate in this panel that looks at a topic as relevant as financing of development in urban and territorial areas and the role of the SDBs. I'd like to address how to strengthen cooperation between MDBs and SDBs. There would be at least 2 paths. One is associated with the existence of a converging work agenda and goals. The other is associated with financial and non-financial instruments and products suitable for stimulating and strengthening cooperation. I'd like to use CAF's experience to illustrate how cooperation can be fostered. CAF has been working for a long time with a territorial and cities focus. The bank has operations in dozens of cities in several countries in Latin America, supporting teams that include urban transportation, water and sewage, urbanization, public lighting, public services, and many others. In Brazil alone, the bank has operations in almost 30 cities. In some cases, they are operations that involve neighboring cities or that share common challenges in such a way that they are complementary and synergetic operations. To strengthen that work, the bank has developed the Cities with a Future program, which integrates actions from various internal areas of the bank in order to promote coherent interventions with a much greater impact. The bank has been supporting national and subnational development banks for several years now. In fact, we have a long history of working with those banks through a variety of instruments and products that are suited to each situation. In addition to the financial support around the work programs of common interest, such as cities, we also support those banks as shareholders. In fact, we are shareholders of many SDBs and in some cases since their foundations. We also have a long track record with technical cooperation in areas such as institutional strengthening, corporate governance, risk analysis and assessment, and more recently, digital transformation. We have a history of several dozen operations with SDBs, and with many of them, we have strong relationships and ties with many years of important and recognized achievements. But we are aiming for much more and with a renewed vision for the region's new challenges. In this sense, we are advancing the cooperation with the SDBs, seeking to strengthen lines of action that include support for work programs that can meet the specific needs of various municipalities, especially the small ones, support for the e-government agenda, support for actions to strengthen local entrepreneurship, even more intensive support to SMEs, including investment financing, access to new technologies and capacity building, support for specific sectors that can help accelerate the post-pandemic economic recovery and generate jobs such as tourism, support for energy efficiency and sustainable technology programs, and support for operations with special attention to gender issues and vulnerable groups. In this regard, I'd like to highlight some points on our recent agenda with the SDBs. A facility to support SDBs in actions to combat the pandemic and economic reactivation. This is a $1.6 billion credit line approved in 2020 with special conditions, which has allowed us to further expand and strengthen our actions with those banks. Strengthening of our agenda of guarantees, including second losses, and support for bonus issuance programs, strengthening of the agenda of local currency operations, and strengthening and expansion of training programs, including with MOCs, which has already had exceptional results with thousands of participants throughout the region. We believe that the CAF's case is useful to illustrate ways to strengthen cooperation between the MDBs and SDBs. The challenges before us, such as the climate change and the increasing poverty in the region, will probably require an even closer relationship between the MDBs and the SDBs. But to succeed in this agenda, it will be necessary to understand the different realities of those banks and their different needs, be flexible, and seek to aim for common goals. Thank you very much, Emilie.
Thank you so much, Mr. Arbache. Your presentation illustrates perfectly the strong potential of public development banks for financial innovation and the win-win cooperation between MDBs and SDBs. And now I'm very happy to give the floor to Mr. José Luis Curbelo, who is the CEO of Cofides, Spain's development finance agency. Mr. Curbelo, could you share your views on how to reinforce the additionality of public funds and to develop blended finance to achieve a sustainable local development? Thank you.
Thank you very much. It is a great pleasure to be here in Rome in these beautiful days, and I congratulate CDP for organizing the meeting. Well, I will talk about the role of private sector and how you mobilize private sector in development banking. It is easy to assume that there is a commonly shared axioma today speaking about the private sector mobilization, both in knowledge and resources, is essential if we want to achieve all the objectives of the Agenda 2030, if we want to get all the Paris Agreement commitments, and if we want to accelerate the green transition. Certainly, there is a new role for the private sector, but to consolidate a private sector in development forces us to find a new balance between straightforward public subsidies with different type of blending structures in which you combine somehow public and philanthropic resources to lever private resources that act with different tolerance to risk at each individual level. So there is a new strategic objective today that is partially de-risking the private sector perception of risk, particularly in challenging sectors, in challenging regions, and we could talk about urban and peripheral rural areas, as well as in those activities that we consider today that are public goods. By that, I could talk about climate, we could talk about digitalization, we could talk about health, gender, and so on and so forth. I think that if we want to achieve, if we want to give a leap forward in achieving all these goals, we have to be able to blend resources in a way in which you de-risk the participation of the private sector because the perceived additional risks that you have to operate in challenging areas. With this idea of mine, we have been working in the last few years in a very keen way with the Spanish Agency for International Cooperation and with the European Union in launching forward a few, I will say, model projects. On the one hand, we have had a project that I will consider particularly interesting, that is we call the Fondo Uruma. The Fondo Uruma is certainly a fund in which you use public resources, small amounts of public resources, to leverage a great amount of private investment. This is a 130 million project to strengthen rural sustainable agriculture in Africa and in Latin America, basically, in which we have been able to put together 10 million euros of fair loss contribution of the European Union, 20 million subordinated debt contributed by the Spanish Agency of International Cooperation, and 90 millions that I say the amount of leverage, contributing 30 millions of somehow public origin resources, leveraging 90 millions private investments from Caixa, the biggest Spanish bank today, and Allianz, the German insurance company. All of this has been also possible because the European Union has contributed 8 million euros of technical assistance. So here you have a program of around 130, 140 million euros that have had only 30 millions of public money, and the rest has been contributed by public investors that are going to be investing in rural projects, in projects in rural areas of Latin America and Africa. On the other hand, we have had another project also made with the support of the Spanish Agency for International Cooperation on renewable energy. So we have had in this a project in which we have contributed 30 millions of the Spanish cooperation, 20 millions of the guarantee fund of the European Union, 2 millions of technical assistance by the European Union to leverage a multiple amount of private sector investments in rural electrification in peripheral, peri-urban areas and rural areas of Africa. So here, what I want to emphasize is that this has been a projects that have been built from the beginning, trying to blend resources from different sources in a very specific way, project by project, so that we leverage resources. Finally, I would like to make a few conclusions that probably I could be very criticized for those conclusions, but I consider that they are essential. Is that the development banks of the future are going to be less of financial intermediation and more of knowledge and ability to structure operations and introducing ability to, let's call, persuade different actors around a table to structure operations. I think that an essential element that public development banks in the future will have to have is ability to blend resources from different sources in order to de-risk the perceived risk that private sector perceive in international projects. Finally, I will say that at the end, a big issue will be fine-tuning the length and strength of the lever that you have to use to promote sustainable development of the private sector in developing countries. Thank you very much.
Thank you so much for this great analysis, recommendation, and successful experience of innovation to develop blended finance vehicles and de-risking instruments with a very impressive leveraging effect to finance the sustainable local transition. Thank you very much. And now I would like to call for the video message from Mr. Philippe Camille Akoa, who's the General Director of FECOM, the SDB in Cameroon, and is also the President of RIAFCO, the African Alliance of Subnational Development Banks. Have a good viewing of the video.
Les institutions de financement des collectivités locales en Afrique ont des outils qui ont été mis sous le pied par les gouvernements pour accompagner techniquement et financièrement les collectivités dans leur mission de développement local. Donc, ce sont des institutions, certaines reçoivent des ressources provenant des États et d'autres reçoivent plus de ressources provenant donc de la coopération internationale. Mais d'autres aussi sont un mélange des deux, donc ressources étatiques et ressources des collectivités. Donc, ce sont généralement des institutions publiques donc, qui accompagnent ce développement au niveau local. Elles ont donc pour but également donc, de pouvoir faire en sorte que les ressources internationales puissent être fédérées autour d'elles parce qu'elles se positionnent aujourd'hui comme étant des institutions qui connaissent très bien les collectivités, donc une clientèle particulière qui très souvent n'est pas connue des banques internationales de développement. Elle joue un rôle clé avec des conditions favorables en ce qui concerne donc aussi les financements. Il faut dire aussi aujourd'hui qu'elles se sont regroupées dans le cadre d'une alliance mondiale pour pouvoir se mettre ensemble et faire en sorte que le plaidoyer qu'elles ont à faire soit mieux compris au niveau des institutions internationales. Elles ont aussi été reconnues au niveau des grands agendas urbains où elles sont véritablement des partenaires. Donc, en ce qui concerne le RIAFCO, il faudrait dire que ce réseau africain des institutions de financement des collectivités a 13 membres dans son sein et le but de ce réseau est de faire en sorte qu'il y ait une mutualisation d'abord des connaissances, des échanges d'expériences et pouvoir jouer un véritable rôle d'intermédiaire auprès des banques internationales de développement qui ne connaissent pas toujours très bien quelles sont cette clientèle qui sont les collectivités. Bon, au niveau du FECOM, nous, on doit dire que nous avons une institution qui a été créée en 1974 et dont le rôle est d'accompagner techniquement et financièrement les communes du Cameroun et les régions aujourd'hui. Et cet accompagnement se fait par des ressources de la fiscalité locale que l'État met à la disposition des communes et également par des ressources qui proviennent de la coopération internationale. Le FECOM aussi aujourd'hui peut recevoir des fonds, des bailleurs de fonds privés. C'est le cas un peu avec le Crédit foncier du Cameroun. Et nous travaillons donc aussi avec plusieurs autres partenaires internationaux qui sont la KfW et l'Union européenne.
Thank you so much, Mr. Akoa. And I'm very proud to say that FMDV, our organization, supports both the Alliance of Subnational Development Banks in Africa and in Latin America. We will present this alliance later. And now I'm happy to welcome Mrs. Saloua Sehili, Chief Strategy Officer at the African Development Bank. We will present us how does the AfDB aims at reinforcing its cooperation with subnational development banks to boost the implementation of its subnational finance strategy in Africa. Please, the floor is yours.
Hello, and thank you very much. I'm happy to be here today. I would like to indicate that we're, in a way, the new player in Africa. We are positioning ourselves to play a much more important role in terms of sustainable subnational development. So recognizing the importance of sustainable urban development, the African Development Bank Group, under the leadership of its president, Dr. Adjayi, established the Urban Development Division in 2016. In 2019, the bank approved its subnational finance guidelines, formalizing the bank's approach to subnational development and opening the door for direct support to subnational governments and other entities, such as subnational development banks, utilities, etc. At the same time, the African Development Bank established its Urban Municipal Development Fund, a multi-donor fund that provides technical assistance, capacity building, and project preparation funds. Furthermore, we are currently developing our sustainable urban development strategy to take into account all the requirements to achieve the sustainable development goals and the Paris Accord requirements. So all these synergistic actions demonstrate the bank's commitment to sustainable urban development. The bank recognizes the essential role of subnational development banks, including municipal funds, to act as pooling mechanisms to finance subnational development in light of the economies of scale that can be captured. In the same way that multilateral development banks capture economies of scale to finance development, then subnational development banks would do the same thing, only more at the local level. These special purpose vehicles can facilitate technical assistance and capacity building, as well as provide financing to municipalities or other subnational entities, while also enhancing the development of the financial sector. So what can the African Development Bank do specifically to support subnational development banks? Our policies consider subnational development banks as financial intermediaries. And based on certain eligibility criteria, mainly creditworthiness, the bank can provide the following types of support. Equity investment in the bank itself, whereby the African Development Bank would become a shareholder upon the request of the Subnational Development Bank. An example, for instance, is our shareholding in Shelter Afrique. Another possibility is direct loans to strengthen the balance sheet or to develop the subnational development bank's business line. We can provide a line of credit for on-lending to subnational governments or entities, such as the one we provided in 2019 to Morocco's FEC, whereby the bank extends a line of credit to support loans to subnational governments, such as municipalities. The bank can also provide partial credit or partial risk guarantees to lower the cost of borrowing and extend maturities. We also have multi-donor trust funds in environmental mitigation and adaptation that can be tapped to facilitate a just transition in environmental respect in Africa. We can provide technical assistance and capacity building and project preparation support out of our Urban and Municipal Development Fund, including for the issuance of bonds. We can also finance credit rating and so on, and other diagnostic tools that can help identify where the weaknesses of an institution are in order to remedy and provide financing and support. So our support is demand-driven, and we encourage our subnational counterparts and subnational development banks, potential subnational development banks, to come to us with proposals early on, as our vetting and processing can take up to 1 year or more, depending on the support being sought of the subnational development. We look forward to working more closely with you, with the subnational government, subnational entities, subnational development banks, and I will be happy to answer any questions that might arise. Thank you very much.
Thank you so much, Mrs. Sehili. And we heard your call for greater cooperation between SDBs and the AfDB. And also we heard the great potential to develop financial and non-financial instruments to unlock financing at the subnational level in Africa. So now I'm happy to call Mr. Sergio Gusmao Sushodolski, CEO of BDMG, which is the Public Development Bank of Minas Gerais. Could you please present us how BDMG operates in Minas Gerais to support local development, and also present us the Alliance of SDBs in Latin America and the Caribbean? Thank you.
Thank you, Emilie. It's a pleasure to partake in this discussion. I'd like to thank CDP and IFAD for putting together this amazing second edition of the Financing Commons Summit. It's a pleasure to share the panel with close friends and partners such as José Luis, Jorge, and all the others that are with us today. BDMG, the Development Bank of Minas Gerais, is a 59-year-old institution, almost reaching our 60th anniversary. And we are dedicated to financing the sustainable development projects in Minas Gerais. That includes municipalities, 853 municipalities in our case, and both SMEs and large companies in several sectors, from services, industrial sector, and also in agribusiness, which is 1/3 of our portfolio. We're definitely a 21st century development bank, and in this sense, we have aligned our strategy, our five-year strategy, with the Agenda 2030 of the SDGs, with the Paris Agreement, and with the Addis Ababa Development Finance Agenda, the Agenda of Action of Addis Ababa, which provides the framework for development finance all around the world. Brazil is a member of all of these three international agreements, and we, as a last mile development bank, have the mission to implement partnering in sort of a cascade mode with the national development banks, with the regional development banks, and with the multilateral development banks. And that's the beauty of it, really deploying capital using different kinds of instruments, both on the funding side, through on-lending programs, through the issuance of the first SDG bond in Brazil, which we issued successfully in New York in late last year with the help of IDB Invest, the private arm of the Inter-American Development Bank, by developing digital platforms to not only provide credit to SMEs, but also for small solar energy projects, and also to municipalities. We have now over 450 municipalities on our portfolio, and including the sustainable credit lines that we provide these municipalities. And very importantly, we also work with the Sustainable Infrastructure Foundation and the Source platform in also doing project preparation in terms of the dashboards and all the methodology. And in terms of resources, we've been working with the likes of AfD, the Agence Française de Développement, IFC, and other multilaterals such as the Inter-American Development Banks in having a full-fledged project preparation platform for infrastructure, sustainable infrastructure projects in municipalities and also in the state of Minas Gerais. So we believe that we need to build and join our forces together in this kind of a cascade so that we can really implement and achieve the goals of the SDGs in what is now the decade of action. So in a nutshell, that's how we work, and we're very pleased to have launched this very concrete initiative, which is a deliverable from the Financing Common Summit #1 from 11 months ago in Paris, when we had a similar panel of subnational development banks. And since then, we joined forces. We launched the Alianza de Desarrollo, so the alliance of subnational development banks in Latin America and the Caribbean. We have a steering committee with 21 institutions that are present. We've been hosting workshops where we exchange best practices and we help align our portfolio with the SDGs and with the Paris agreement. And we've been gaining momentum and having more than 240 participants in some of the events that we already have organized. We are here. We are a proud partner of the Financing Common Summit, one of the official partners, both BDMG and the Alianza de Desarrollo, the Development Alliance of Subnational Development Banks. We will be also hosting some events during COP26 in Glasgow. So this is a reality that I believe can be replicated in other regions of the world, and it's a great platform to exchange best practices and really be able to deploy capital that will enhance the development impact in the last mile.
Thank you so much, Sergio, for your great vision and for being a great champion of the Alliance of Subnational Development Banks. And I'm also very pleased to inform you that the Alliance of SDBs in Latin America and the Caribbean has produced a paper on the role of SDBs to finance a resilient urban and territorial post-COVID recovery that you can find on the Summit publication webpage. So please have a look at it, and you will understand in a more concrete way what SDBs can do for the recovery. And now I'm very pleased to welcome our last speaker, Mr. Kamal Adjayi, Mayor of Golfe 3 Lomé in Togo. As a Global South Mayor, you're on the front line to lead a sustainable development at the local level, and you represent the main beneficiaries of financial instruments set up to support local development. Could you share your expectations and recommendations on how to unlock finance at the local level? Thank you, Mr. Mayor. The floor is yours. I think, unfortunately, we have a connection issue with the Mayor of Lomé. I'm really sorry for that. So, you are here.
Hello, can you hear me?
Yes. Please, the floor is yours, Mr. Mayor. We cannot hear you at the moment, Mr. Mayor. Okay, I'm really sorry for this connection issue, but we'll have the opportunity to hear about his experience, I think, in other fora. Thank you so much. So now, I'd like to conclude by giving the floor to our two panelists on stage for a few words. But I would like to sincerely thank you all for your great participation. I think that your presentations demonstrated the strength of collective intelligence and new forms of cooperations to accelerate subnational financing. And two sentences come to my mind naturally. The first one is think globally, act locally. And the second one is alone we go faster, but together we go further. So please, I let you conclude the session. Please, Mr. Curbelo.
No, I only could underline your last two sentences, and I will say that we have to focus more and more in how to put ideas and put resources together rather than having the traditional way in which we used to work, in which we put only money on the table.
Thank you. Sergio?
I think it's a great event that development banks of all shapes and sizes and regions of the world can finally meet together in our own collective venue. For a number of years and decades, we were meeting on the sidelines of different annual meetings of specific institutions. And finally, I believe that Emilie and other leaders who created IDFC a decade ago and that evolved into creating the financing common really can create this kind of a corner of the world once a year where we meet. And of course, Rome is a great place to do that, and I'm sure that next year with EIB and African Development Bank we also have a great event. But most importantly is that we can partner, that we can create concrete solutions for all and many development challenges of our time. And of course that includes not only ending and fighting poverty, but also the climate change and all the development goals challenges, which with an ambitious agenda, which is the Agenda 2030. So being able to be together, to actually mobilize resources, to understand the role of subnational and national development banks that are very close to the territory, to the challenges, exchange solutions that they may be created in Africa, they may be created in Latin America, in Asia, to be able to share these common challenges for some of us who have lived and worked in different places of the world. This, I believe, is something that is very special and that we should continue to deepen and strengthen our cooperation. So thank you so much to hold and host this Financing Common Summit, and I hope that this event will evolve and grow along the years and produce concrete results. The Alliance of Subnational Development Banks of Latin America and the Caribbean is already a concrete deliverable of Financing Common Summit #1. And now we need to continue on that same path and create other concrete solutions that will create a better world. Thank you.
Thank you so much. Thank you. You were